Hi, good evening. I'd just like to give you the structure of this session, which is for 40 minutes. So I'll do a brief introduction, and then each panelist will speak for 5 minutes. We'd like to basically expand on what Mr. Srinivasan's report and look at how has Karnataka's the microfinance sector changed, over the course of last 10 years. Specifically, one of the things which Mr. Srinivasan raised is in terms of range of products which are being available to, the customers. Because, true financial inclusion actually requires multiple products which actually satisfy the different needs of the customer. So from that perspective, how has it changed, over this? Again, the other aspect, of course, is the kind of players who were there 10 years ago and the kind of players who are there today has completely changed, There has been consolidation also here in Karnataka. How has that impacted competition, etc.? Then, we'd like to see some of the challenges which Mr. Srinivasan raised, which are ahead of us. Things like pricing, which he raised. The other thing is he talked about what is the future in terms of enterprise financing, etc. Those are the kinds of, what are those challenges which are there? So look at that aspect also. I mean, I'm just giving you suggestions. You can speak whatever you wish, right? And finally, there's a little, coming from Kumble country, you have to give a googly, right? So I want them in the conclusion, just 1 minute, say what they think Karnataka's microfinance will look like in 2030. I was thinking 10 years, but 10 years is too far. 5 years is too near. So maybe 2030, how does microfinance in Karnataka look like? Just to think about it and talk about it, So just to start the introduction, I'd just like to say, a lot of us don't know the history that well of microfinance in India, which Mr. Srinivasan alluded to. First of all, microfinance started in India in 1974. That is 2 years before Grameen Bank in Bangladesh, by Ilaban, when she started Seva Bank, And there were actually 2 other women, I don't know the details, one was in Tamil Nadu and the other was in Maharashtra, also started at the same time, okay? So microfinance history in India started from 1974 in India. Then Mr. Srinivasan said the big change which happened was the introduction of the self-help group. And the champion of that, of course, was Al Fernandez and Myrada, which happened in 1982. And that changed the whole dynamics of scaling up microfinance in India. The next change actually came in 1996, I think, when BASIC started the first for-profit institution in India, and that started the whole range of for-profit microfinance institutions which came into India. And I think finally, around 2016-17, the SFBs which came in was the final institutional change which took place. So these are historically the different steps which has taken place. The other thing I just want to tell you about a couple of months back, because in India we have different types, JLG, SHG, individual loans, or different types of models which work towards work in microfinance. So rarely do we get a consolidated data about microfinance in India. So we tried to make an estimate as of March 22, and the number of accounts between just JLG and SHG was, 13 crores, 13 crores, 13 crores, about 100 million. No, I mean, 130 million, right? 13 crores. And if you take away, let's say, I mean, we don't know what is the overlap duplication in that, even if you are very generous and say that maybe out of 130 million, 30 million was overlap, that makes the country, in the country, we serve 100 million customers, okay? And we have statistics. This does not include individual loans because we couldn't get the statistics of individual loans from all institutions. We then looked at what is the total loan outstanding, and as of March 23, it was 6,000 lakh crores, okay? So that makes India number one in microfinance in the world, So we might be fighting with Pakistan to be the number one in ODI, but we are number one in microfinance in the world, and I think this needs, Mr. Srinivasan maybe in his next study can do this thing, and this needs to be documented and highlighted and appreciated across the, across India and the world. As far as Karnataka is concerned, I think Mr. Srinivasan said one of the, I think SKDRDP is definitely the largest SHG lender, I mean, in India, and probably the world, and not only SHG, it may be the largest microfinance lender in the world, So I don't know, what do you think, Manjunath, about? No, I mean, I'm talking about BC is a part of it is a part of microfinance, right? So as you take a total about the loan disbursed under this thing, it is largest in India, probably largest in the world, okay? So that is quite incredible. Here also today, Grameen CreditAccess is number one among the MFIs in India, and among among SFBs, Ujjivan definitely has the largest microfinance portfolio among the SFBs. So we have quite a number of number ones in Karnataka, so that is something we have to think, There are two things, I think, in Karnataka which makes it very, very unique. One is, if you look at the balance of semi-urban, urban financing and rural financing, and through the SHG, I think the balance is the best in India in terms of SHG and the MFI, this thing. Which gives a very balanced approach of financing, both in the rural areas and in semi-urban, urban areas. SKDRDP is largely rural, your Grameen CreditAccess is rural, BSS is largely rural. So we have a lot of rural institutions, and other are hybrid, etc. So that is a very unique feature, and I think that's a very good feature for Karnataka. The other thing, of course, is, Salimath and I have to take some credit along with Suresh of having started AKMI and making sure that, we follow a disciplined kind of process, we have good governance, and we are able to keep we have been able to manage all the crises very well, I'll close with this thing, we used to meet in Ghosh's actually, and have coffee and discuss, we should put together AKMI, etc. And it took many cups of coffee and many months till actually we found this problem. Of course, Kolar was there, but then the burning issue of Andhra Pradesh, and we said we will never allow Karnataka to go the way of Andhra Pradesh, and we have to do whatever has to be done to make sure, that microfinance is safe, sound, and works very well in Karnataka. So I think AKMI plays a huge, huge role. Yeah? So with that, I think I'll ask Udaya to speak first because he has to catch a flight. Udaya, by the way, I mean, apart from being the largest microfinance institution, MFI in India, I think one of the other which distinguished them is they have developed very unique ways of raising money and bringing cost of funds down. And I think Udaya is again making another trip to ensure that happens. So we'll ask him to talk.
Thank you, sir. I think it's a very pleasant day when we are sitting around here after I think 3-4 years after COVID. Personally, physically, we are all meeting here and celebrating something very good developments, very good momentum in microfinance, sitting at crossing 100,000 loan accounts in the state. That is what the data says. I think if you look back this, I joined this industry 13 years back. At that time, probably we were very small, and as an industry we are small. But the foundation of association was built very strong at that time, and then all of us worked together and then ensured the crises are mitigated even after there was crisis like demonetization we faced or COVID. I think we sailed through all of that and successfully reached at this level. There is a lot of contribution from each members of AKMI and employees of all the microfinance, and thankfully, most importantly, the customers who are so resilient in Karnataka. I think we need to give a very different respect to our customer in Karnataka. I think one is always we saw the best of the quality in the state, best of the the culture of microfinance built very well in the state, and I think this is all possible because of the institutions, the employees who are able to connect well with the customers and then probably build the right culture in this space. Therefore, probably when Srinivasan sir was presenting the data, it shows the quality, the very responsible, reasonable growth, the quality of portfolio, the less delinquency, the institutions' approach towards giving back to communities through CSR. We have seen a lot of activities by everybody. All these are, and again the contribution by the government. I think time and again the government stepped in and supported. I remember the Chief Secretary writing individual letters to all the DCs during the demonetization where we faced some difficulty. He wrote personal letters to every DCs in the state to support the microfinance by giving administrative support. I remember this in 2016-17 when we had this challenge. I think, and then afterwards also again during COVID, again allowing us to operate properly, and then time and again the participatory program. I think that the huge contribution from state of government, state of Karnataka, and the institutions. And then the one more key, I think before talking about the industry association, I think this one association, what I saw, we don't have a difference between the primary members of MFIs or SHGs or SFBs or everything. So we are all common primary members. We are working together always. Everybody at a shout, everybody together in probably Capital Hotel or somewhere, sitting and discussing things and able to resolve issues around anything, whether it is small MFI, big MFI, medium MFI, SFB, anything. I think we are able to solve that. And what Sir has said, while the state has developed well, top MFIs are from Karnataka, top SFBs are from Karnataka, top SHGs from Karnataka. As I say, industry, Karnataka is the top. I think huge respect to Karnataka in this direction. I think this will come from the institutions, employees, and the customers. These three working together only it is possible, otherwise it's not possible. You cannot sit in the boardroom and create this environment here. It's all because of the institutions who actually ensure the employees working responsibly and the customer being resilient here. I think when compared to the whole industry and as I say, institution, the journey definitely keep moving well, has been very well, but we keep relook at what customer wants. If you look at, probably we would look 5 years back, 2 years back, probably now, right now also you would have seen. I just read a report we did actually from a third party on what customer wants. The aspiration remains same. I want to improve my business. I need larger loan. I want to build my house. I want to educate my kids. If you see any year, last 10 years, if you go back and check the customer, these are the 3 top aspirations of our customers, which remain same. Maybe size of the loan requirement would have gone up, or the home aspiration, the type of home would have improved from what it was 10 years back. I think customer aspiration we need to keep follow. I think so long we are able to follow them and then provide the suitable products, whether it's for education or for home or for businesses, so long, suitable products, then suitable process with technology adopted, and the suitability of price and service. If you are able to maintain, I think we can continue to build this industry and the responsible lending along with this kind of responsible customer and responsible employees. I think we can grow. And when you say 2030, I think this will be much bigger, much bigger. Today already, if you compare between MFI and SSG together, probably around 40 to 40,000 crores. If I look at the numbers, I think which will be probably more than 1 lakh crores. So we'll in Karnataka itself. No, it is not difficult. I'll tell you. Look at Bangla today. It's already about 1.2 lakh crore portfolio. Bangla as a unit, as a country, is about 1.2 lakh crore portfolio. And looking at the Karnataka's entrepreneurs, SMEs and the requirement of fund, the education, the per capita income, per capita GDP, if you look at, I think there's a case to cross 1 lakh crore microfinance in this state in next few years, definitely possible. But what it looks like as a center or what it looks like as a customer, probably we will do, the whole technology will take place in types of product suitability, the decision making, the risk mitigations, the audit, everything probably is a tech-enabled process rather than personal. But you'll get extra space and time to have a relationship building, because your time is saved using tech for managing your process, business, collection, disbursement, risk, decisions. So you have more time to handle relationship, trust building. So because this so long it is an unsecured business, the building trust is your security. So it will remain for microfinance. Therefore, I think relationship building and the process building using technology, which will continue. I think we will be, by that time, we will be at that stage. So I will leave at this point of time. I will hand over mic to Manjunath, sir.
Thank you. Om Shri Manjunathaya Nama. Thank you, Samit, for that. It was a beautiful introduction. And thank you, Srinivasan sir. I think you did, it's a wonderful report. You have really brought out the impact part, the present sectors, present standing, the impact, as well as you have flagged the concerns. And I'm sure many of the institutions here have actually tried to address the concerns that you have raised. Now, quickly recapitulating the impact of MFIs in Karnataka, I would like to quickly run through. I have got 22 points and he has given me only 5 minutes. So I have to do it very quickly. But I want all of you to understand this, and when we go back to field, to remember this, because this is what we have done for Karnataka. Financial inclusion, more than 50 lakh individual accounts opened in the state of Karnataka by all your efforts. Financial intermediation, savings, in fact, even SHG interest subvention is happening, and more than 2.7 lakh SHGs have got interest subvention because of the efforts of the BCs in Karnataka. Financial literacy, you already know about it. You can always boast of a financial literacy work that you have been doing. Hassle-free credit, of course, I don't have to say anything. Skill development and micro enterprise creation. I want to just narrate one product. This Sidbi Prayas product, which was introduced 4 years back across the country as an experiment. In Karnataka, we have crossed 1,100 crores at 10%, 11%, and now we're going at 12%. And each product, each loan can go up to 5 lakhs. And the average that SKDRDP has done today is 3.37 lakh per beneficiary. 31,000 current outstanding members at 3.37 lakh, something like 750 crore is the current outstanding. So you can see how much contribution this sector has given for enterprise creation, enterprise development. And you can see one point that you must have noticed there in Gulbarga and in Bidar and Bijapur, you could see the per capita income was less, but the loan taken was higher. Means that these institutions have taken that much higher risk actually to support backward regions in the state. Women empowerment, I don't have to say. Women empowerment, the Chief Minister himself said, because of the SAG movement in the state, now because of that free bus that he has given to women, women are going on a tour now across Karnataka. Women, thousands and lakhs of women are going on tour because they're empowered now. They don't have to wait for their husbands and their men folk in the family to make these trips to Dharmasthala and to Subramanya and Tirupati and all those places. Empowerment is really seen. Farmers empowerment. The FP was started by Salimath and the other such activities. The Yantra Shri program of SKDRDP. You can name many of them. We have helped the farmers to really stand on their own. The CHSC program, 165 CHSCs done by SKDRDP, amounting to almost 150 crores, which no other, in fact, I want to tell you this, no other the equipment manufacturing company have been able to install CHSC program in Karnataka, which SKDRDP did. They are the actual manufacturers, they have engineers, they are the manufacturers, but they couldn't run the CHSC program. We have done it. Insurance, health and life insurance, the credit assurance that you are giving, it's nearly touching about 7.5 million people that it is touching. And then you need to remember this. SKDRDP does 1 crore health insurance today, 1 crore health insurance, and something like we have almost got 1.5 crore life insurance, and added all your figures. I don't have your figures, but that's a wonderful figure that you are doing for life insurance and health insurance. Smooth implementation of government schemes, which the madam herself admitted, because now you have an enabling institution in MFIs. The SAG movement of the NRLM is able to take off that much quicker. You need to remember that. Community development, the lot of CSR activities that you all do, SKDRDP does, and 600 tanks, 500 drinking water units in villages, the help that is given to the milk societies, the local schools, the crematoriums, you name them, we are all there. The WASH program, of course, all of you are doing such a great work in WASH program, and actually improving the community living environment. The tank and water program, the green energy. Most of you, I don't know, some of you are, whether you are continuing that or not, but then SKDRDP has stuck to it, and we are doing we do in a year something like 75,000 hot water projects and the solar lighting units. The green energy, poverty alleviation. It's all started with poverty alleviation. The GDP, your contribution to GDP is really so, it can be easily measured. Education, in fact, the quality of education that you are contributing to, the infrastructure and the total SDG, the Sustainable Development Goals that you are talking of 2030, how much we are all contributing. I think out of the 17, we must be contributing to 1239. I have no time to discuss that, but that is the kind of contribution we are giving to SDG. De-addiction, of course, some of you also must be, it's a major program for us. We have done 1,700 de-addiction camps in the country, de-addicting 1.2 lakh men in the state of Karnataka. We are the only organization fighting against alcoholism in the state of Karnataka and perhaps in the entire country. And then disaster relief, digitization, another major step that we are all working on. We are making women really digital friendly and experts in that. The UPI transaction that we are bringing in, that's a great transformation. The COVID response. So we can all be very proud. We may be charging 26%, some of us may be charging less, more, whatever, but we have enabled the community to really take to the next level. Now what has happened is very great, but I would like to just point out what should have or what could have happened, which is the collaboration part. All of us are working in the field and very hard workers, but are we leveraging the strengths that we have already got? For example, just take the credit assurance, the loan insurance part that most of us have got. Some of them have got at 11 rupees, some of them have got 17 rupees, 1,000, that's the insurance fee that they pay to the insurance company, 11 rupees. SKDRDP, during the COVID year, we paid 2 rupee 11 paisa. Today we are going at 4 rupee 24 paisa. That's because we have the volumes. Just imagine if we all had the same volume and we had left our small little differences and fought for the insurance, we could have still negotiated for all of us at around 4 rupees, 1,000. Similarly, the health insurance. SKDRDP's health insurance product goes at 4.3% against the value. In the sense, if it is for a lakh of rupees, somebody pays 4,300 rupees for 4 lives put together. Now, in the market today, it is going at 11%. You talk about all the health insurance is going at 11%. Because I have the volumes, I am going at 4.2%. Just imagine if all of us had got together for one health insurance product, we would have got it at much lesser price. But we are not looking at it that way. And similarly, you talk of the insurance schemes also. In fact, for SKDRDP, the LIC of India has come out with an exclusive micro budget program. It's exclusively for SKDRDP. If all of us had joined together, how much more benefit we would have got by now for our customers. So we are really not collaborating. We are all on our own ways, and I don't know what prevents other organizations to collaborate. I think at least for some of the products, and especially negotiating with the banks for our credit needs, that's another area, major area, where we should be collaborating. We should be joining together. Then customer handling is another area where we need to collaborate more, which we are really not doing. And then, of course, the customer check is another area which we are really doing nothing about now. And then CSR, collaboration in CSR activities. We can really determine many areas of activity where we can divert some of our surpluses so that the community feels much more happier about us. But we are just meeting and then talking about it and then forgetting it. We are really not doing anything about CSR activities as an institution, as a consortium. So I think these are some of the things going forward. If we have to strengthen AKMI, these are some of the things which we must be thinking about and doing something about. Because all of us are doing so many great things together, but we are only little things we are doing. But if we all join together as a consortium for doing certain basic things which I have mentioned, I think we can do a lot more, and we can make the community a lot more happier, and our bargaining power will that much increase with the government, with the administration, with the politician. You name them, our bargaining power will that much increase. But we are not doing it now. So I suppose this summit will pave way for all Kannada speaking microfinance workers in Karnataka to come together to negotiate on certain imponderables and then negotiate and come out with methodologies where we can stand on a better platform. Thank you.
Thank you. Yeah, very motivating speak by Dr. Manjunath. One aspect that I would like to highlight is regarding the cost. First of all, when we began microfinance, it was access which was most important than the cost. Because though the public sector banks and other banks were lending at a lower rate, but cost of getting that credit itself was quite high. Nobody monetized the cost that the borrower incurs in getting a loan and repaying it. Perhaps it would have been double than what the bank charged. So microfinance in its initial several years fulfilled this gap of access. But at the same time, it was accused of usurious rates. And initially usurious rates were also there. I can't deny that the usurious rates were there. The Andhra crisis, among other things, also was because of the usurious rates. So then I was also a board member of Sadhan. We used to interact with various officials of RBI, including governor and deputy governor. They had shown concern, and then we were able to present to them, because we are a bulk borrowers from the bank, the rate they charge themselves were about 12-13%. Now, if the banks say their rate is risk-based, housing loan even today they lend at 8.5%. 7 also, okay. Yeah. So, what is the risk of housing loans failure? What is the risk of bulk lending to microfinance institution? I don't think in the country any microfinance loan given to any microfinance organization is under default. Yeah.
Excepting situations like Andhra or
No, they also did not default except a few. No microfinance organization has failed and failed to repay its loan. So this was the mindset of the public sector bank or a policy dispensation at that point of time. Then we were pleading that if we can get the rate of the cost of finance lowered, then it is possible. Then many of them felt that then access to public deposit. RBI was very apprehensive, and then they said maybe if the level of regulation is very high, then we can look at lowering of interest. So a new set of institutions, small finance bank came, primarily with the object that you access the public deposit so that you are well governed and separate risk management structure is there. The premise for which the SFBs were started was because it will have access to public funds and then the cost would be lowered. Now Samit has to say whether he was able to reduce the rates of the microfinance. Because suddenly the cost of delivery went high. As a microfinance institution, their cost of delivery is low. Now their cost of delivery has gone up and also they have to manage liability. So therefore, the purpose for which the small finance banks and other policy dispensation came into being did not serve the purpose. So the cost structure has still gone high. Then all of us who are purely NBFCs complained to Reserve Bank of India that there is no level playing field, that the SFBs there is no regulation of rate of interest, whereas there is a regulation as far as the rate of interest is concerned for NBFC. So there is no level playing field. So they came up with the idea that instead of creating a measure for how do we regulate the rate of interest or how do you collectively reduce the rate of interest, they said NBFC also there is no limitation. According to board policy, you can charge whatever rate of interest that you want to charge. So if you look at the overall rate of interest, instead of coming down, they have gone up. So it's a question of introspection. And in that, there are 2-3 factors which are also responsible, which we have not addressed. Srinivasan was of the opinion that government should intervene in this regard. Now, if you look at all the microfinance, majority of the microfinance institutions that have come in the country, where the capital comes from? Is it Indian capital? I don't think there is a Indian capital. It has come from various foreign institutional investors, various funders and all that. Obviously, they have an objective that there should be a return on their investment. And for most of the organization, there is always a pressure to return that. So therefore, the purpose like equity as well as return on investment, there is always a challenge. So if any Indian institution like SIDBI or NABARD or government could have come out into the play in the equity market and provided equity without putting pressure on return on investment. Because when the GDP is being stabilized by the microfinance sector, when the social unrest is controlled by the this sector, because when I went to Reserve Bank of India post demonetization, they were worried that after demonetization there would be riots. So they said, because you people are on the ground, you are with the client, therefore the expected right did not take place. So that is the confidence the Reserve Bank of India had on this microfinance sector. So therefore, they should have come out with a dispensation. Now they say, like Atmanirbhar Bharat, one who wants to do any investment in chips and all, how much money the government is pouring in? Is it creating jobs? They are all using AI tools. It may create wealth, but I don't think they are going to create jobs. Government itself acknowledges that if at all job is created, it is SME sector or informal sector. But therefore, as a collective body, even at the MFIN level and this level, we must emphasize that capital should flow from Indian institution without much pressure on return of investment. So therefore, one of the greatest pressure on microfinance institution to worry more on return on investment will be reduced. That is one portion. The other is also like Dr. Manjunath said. Can you share, like what he said, we can also share some of the infrastructure. For example, in case of mobile, earlier they were all very extremely expensive, but mobile today is most affordable in the entire world. Also because they are sharing the infrastructure, like towers, they all share. So nowadays, is it not possible to create such infrastructure whereby there could be common collections? All of us go to the same village to do the same collection. I will collect for 20, he will collect for another 25 and all that. All of us will go. So there are various intermediaries who will do the cash collection. So collectively, if you can negotiate, if you can develop a system whereby, because nowadays slowly digital collection is happening. Most of the around 20-25%. In Bihar, I think the digital collection percent is very high. I am very surprised to see that. So similarly, if we all put our head together, create a mechanism whereby there could be common collection through digital and other means, that also can reduce the cost. Another cost reduction system, Dr. Manjunath said, his cost is one of the lowest in the country. Ours is still lower in some program. Because banks are lending at say 9%, 10%, they will give some 5% commission. So the money that is available to the down client is 15%. But the same banks, except SKDRDP, whom are they appointed as a BC? He himself tried to facilitate some other organization to, yeah. But the enormous difficulty that you have faced, for yourself there is no limit. You can get anything for BC, but it has not become a replicable model. Even there is some reservation among the public sector bank to appoint somebody as BC. So BC is another channel where the cost can be reduced. So these are some of the things that we have to look at. One is we ourselves have to increase our digital collection methodology. And in that, another factor also is the staff attrition. Always there is a competition among us. Every year, what is the percentage of rise each employee needs to get. Look at government, what is the increment, what they will get. So in a microfinance sector, everybody expects some 20% rise, 10% rise. Continuously there is a pressure on the cost of people, especially in the field people. So there is one continuously moving from one to other because we say we'll give whatever last drawn salary, I will give another 10% hike, 20% hike. There is a competition among them without any improvement in the quality. The same stock, it is moving from one organization to other. So therefore, here also we must look at any innovation in terms of artificial intelligence. Where can we reduce our cost? Thereby also they reduce the rate of interest. See, these are some of the things that we should look at. Eventually, we should reduce our cost, I agree. But then I also see the fintech companies, emerging fintech company, who are supposed to be a solution for this. I have seen some of them charging as high as 50%. Fintech percent is supposed to be a solution for everything. Now they are charging double than what microfinance are charging. So we have been making a lot of efforts to reduce the cost, but instead of reduction, it is going up and up and up. So all of us should put our heads together, find different solution, come with some innovation, and it should stabilize. Otherwise, we cannot become a most developed nation. Like our Prime Minister said, by 2047, we should be the leading developed nation. Unless we remove these bottlenecks, we can't be a developed nation. We'll ever be aspiring developed nation, never become a developed nation. So with these words, I thank you.
So you'll leave it in by about 7:30. Okay. I think you must have been bored already seeing me too many times out here. But still I will try and entertain you a bit. You see, one of the issues that we face in the microfinance sector is that the demand is unlimited. Sometimes we compete for something that we need not really compete for. We do that. With the result, what Manjunath and later Vivekanand talked about, where we could have collaborated and developed the sector and the business more, we have been spending resources in trying to exclude somebody rather than develop the market together. There could have been several things, like Manjunath gave several examples and Vivekanand talked about a few examples. So is it possible that we get together where we can get together and keep the IPR on product design or process or IT or whatever, so the differentiators make themselves in the market? Because with the level of customer attrition, which has been steady over the last 10 years, Samit, it has never fallen below, say, 35-40% in most of the major institutions. But no institution has collapsed. For every customer that goes, 1.5 customers come in. That's how you show the annual growth rates, which means the market has depth and the outgoing customer is no worse than or no better than the incoming customer. Both are equally good in terms of credit discipline. They have serviced us. So, are we missing out on collaboration possibilities, thereby using economies of scale, which are possible on certain aspects? For some time, I think the industry was talking about shared IT vertical infrastructure. It fell through after some time. For the small ones, SIDBI talked about and some initial movement took place. But one thing we should recognize, the entire credit referencing that has come through, it came through as an act of collaboration between all the leading MFIs. You were there when Vijay and Vasu and all that started up. And now it has become mainstream, which is the envy of several other countries, where microfinance is strong, but you don't have a decent credit bureau through which you can reference the customer's past record and the level of debt and all that. And it's a key source of information. The second issue that I wanted to also focus on, what has happened to the really poor? We are still talking about 2 levels above the base poverty levels. Now we have grown, we have done a reasonable enough, work, dealing with those vulnerable, but who are still able to make a life for themselves with whatever support we are able to give. But have we thought about those who are 1 or 2 levels below? Because the demand at the level where we are doing is unlimited. Are we also not required to think of those who require it more? Business-wise, it may not make sense. Because I think in the distant past, we used to have Bandhan doing, still Bandhan Konagar is trying to do this graduation of the poorest of the poor. Samit, you yourself, and then Grameen, Kuta, those days, you used to have this PPI index being monitored over a number of years. But then I think all these attempts were given up. Where these seemed to be maybe things which are not relevant to growing business. We should actually focus on expanding and then making service available to more. Should we revisit the customer profile that we have compared to the areas that we operate? Look at what can be done. It may not be that we can give the same loans to them. Are there other things? Can we bring in CSR collaborations to deal with those ultra poor people, to build basic bankability from where we can start off lending so that their livelihoods also improve? I think this is a thought process, because we are in the business of dealing with the poor. We should also be in the business of dealing with the poorest. That is one of the points. The third, if you look at what is happening in the public space, public funding coming in, especially for social and development sectors, is reducing. We can look at the overall numbers that are announced in the budget. But you go also look at how the year gets completed. In most of the years, the expenditure is not made, it's made to the extent of 60-70%. This year's expenditure is held over. So you may not pay the farmers where they are under the PM Kisan scheme, you say 5,000 crores we will hold over. Next year's budget will show a 50% increase. But this is past arrears. And of this 50% increase, still only 70% is paid. If you look at the actual development expenditure that is taking place, whether it is food subsidy, NREGS allocation, the point I am making is increasingly private capital will be called upon to replace the relatively weaker flow from public sources. One of the, underlying messages is, people are becoming better off compared to there is no abject poverty. If it is so, then why they cannot find a slightly better source? You look at enterprise creation, there used to be a subsidy scheme that has been stopped. We don't see for SHGs, only I think that subsidy scheme is there. For farming operations, this year it was touch and go. We don't know about next year, whether the entire, subsidy of 5% will be available or only the 2% subsidy which retains the loan at 7%. It is not that we are in favor of subsidies or we are against it. The reality is, on the ground, private capital is going to be more required as we go ahead. Are we prepared to look at those scenarios?
Education, wash, in fact, investments are
coming down very severely. And so on all these places, there is going to be a call on somebody to lend to fill the gap. So are we in that there? I think this is also one of the issues. The fourth point I would like to make is, we have been in whichever geographical location for a long time. We have done 5 cycles, 10 cycles, 12 cycles. Do we really have people who understand the major livelihood, how those cycles go? With that understanding, do we actually engage in our credit portfolios? And that understanding, whether it helps people who are actually on the ground. If you look at, say, the milk sector, every 4 years it has a burnout. High milk prices, lot more investment in cows and buffaloes. When the milk comes to the market, the prices fall. People who invested, they have to get out at whatever price. When we know that this is happening, is it possible for us to be able to understand the cycle and then advise? To what extent our people have invested themselves in understanding local economics? Because we are saying we are doing much more of income generating activities, whether they actually generate income, whether there are higher risks, in what way the customer can do differently. This is something that probably we will have to look at, develop, because this is core to what we are doing. And if we want to do enterprise financing and graduation of those better customers into higher level enterprises, we should have a much finer, refined understanding of what happens to the livelihoods on the ground. Then only we can. It is not that we can finance, say, 10 enterprises standing by itself. You should understand the sector in which these enterprises operate, whether that will thrive. Exceptionally, 5% enterprises, regardless of what happens in the market, may survive, flourish. The remaining 95% will depend on, say, like a stock market. They say a rising tide will lift all the boats, right? When the water flows out, if you have wheels, you can still drive under the boat. How many of them will have a wheel? This is the question that we should be asking in our understanding of what are the local enterprises that sector is doing. This is somewhere I think we need to do some. And of course, the last point I would leave with is, I referred to the increasing digitalization, the increased comfort with using phones and all in the rural areas. What we bring as a comfort, is it only a comfort to the institution? Is it a comfort to the customer? In every location where we introduce a digital lending and then recovery mode, is the customer shifting, the burden of finding cash is shifted to the customer and converting the cash into a digital mode. Someone somewhere has to do that. So have we comfortably passed on? Are we investing some time in understanding that as well? Because if indirect costs are filled out, pushed out to them, and we are saying I am 100% digital, that fellow is getting paid in cash somewhere. How does it become digital in his hand? So some of the things for us to mull about, I don't know whether we are talking about the 2030 now and...
No, yeah.
Then I leave it.
Okay. So, I'll quickly summarize and then we can do a Q&A. I think one thing is, as Mr. Srinivasan said, see, digitalization, and Udaya also said, frankly, we've been in this business from 1974. The customers have also become sophisticated. So we should understand that, right? And what I see is, and what Udaya alluded to, is the transaction aspect in which our staff is mostly involved today will disappear with digitalization, both from disbursement of loans and from collection, okay? So there'll be a lot of time left for relationship building, cross-selling different financial products, etc. So that is something is going to come. And actually what we are seeing, especially after COVID, a lot, because of the QR code, etc., lot of the fund transfers which used to take place purely cash is actually moving to digital. So that will keep increasing, I think, what Manjunath, in his presentation, it is like an ideal presentation, but his institution is God's institution. We have other gods also, because we have shareholders, we have investors, etc. But I think what we can learn from there is the range of products they offer, If we are not able to offer that range of products in the next few years, we will not survive, because the customers require that, In terms of developmental activity, which we are all doing a little bit, but we can't do the kind of things which you all do. That is, it's whatever you do is fabulous, but as we said, we have other gods to satisfy, right? As far as ultra poor is concerned, it's not that it's disappeared, but definitely it's not the priority. Even Ujjivan has an ultra poor program, not in Ujjivan, but in Parinam, which is the sister organization, which it still carries on and it grows, As far as the pricing is concerned, especially of SFBs, let me tell you that the SFBs were first born, we had baptism by fire, right? We had first demonetization, then we had COVID. So there were so many costs involved. GST also is there, but GST's impact was not as much as these two, So there was a huge credit cost. Add to it, we are required by the RBI that at least we should target that 50% of our business comes secured business. Those are new businesses. That means you have to do MSME, you have to do housing, you have to vehicle finance and things like that. Those are all being incubated at the cost of microfinance because we have to remain profitable and yet, support these businesses which are in the incubation stage. But let me tell you two trends which are coming. I think something which came out strongly in the survey is a lot of customers are now questioning the interest rates they're paying. That was not the case 10 years ago, right? As Salimath said that was that they were happy with access. They couldn't care what they were paying. But today, a huge number of customers are questioning why are we paying these rates. Secondly, microfinance is the most profitable banking business today. That's attracting a huge number of new players, including Bajaj, including Jio, Tata's, but I would be worried with the Jio and Reliance and Bajaj, okay? Tata will take their own time, yeah? Huh? Yeah, 800 crores is nothing, yeah. Right, but so there are very big players coming in and they will aim at the top end of the market and they will be highly digitalized, I don't know whether they are going to play the interest rate game like Reliance played in, the pricing game, which they played in the telecom sector. Hopefully not, but they will definitely skim off the best of the market, So these changes will put a huge pressure, and I think in our business model, we should work on lower interest rates, as we go forward, yeah? So with that, I think I'll open to the House. If there are any questions, they would like to ask the panelists. Can you get your mic?
Check. Good evening, sir. Myself, Vishnu Prasad. I represent L&T Finance. I have a question to the panelist. The scale at which microfinance is growing, I'm sure that digital will be the enabler. But at the same time, my question is that when people started paying individually through digital modes, what will happen to the DNA of microfinance, that is group concept? Will it get diluted, or can you throw us light on that?
More digital will enable you to build relationship. So your cost and time is saved because of digital transactions and the digital process, which will help you to build relations. Maybe it may not be group as a meeting. Instead, you may find a different way to have a relationship continuing with alternative way. We have to find alternative way. I think we may not be able to keep the same group meeting regularly, but instead we have to find different way because your cost and time is saved already.
Hi.
See, the other thing is, world over, if you see how microfinance has evolved, it has moved from group to individual lending. So, and increasingly the size of loans become larger and larger, which groups are not ready to bear. And then, that also leads to individual lending. So that's the direction it'll move. At what pace, we don't know, but definitely.
Hi.
I think the superiority that we claimed earlier for group-based financing got much easier process-wise. It enabled one man to service X number of customers. Individually, it would not have been possible. But today we seem to be weakening on the group bonding part, which was one of the original start points. Nobody is enforcing group guarantee anymore. Second, the customer thinks he cannot bear his financial soul or her financial soul in a group. The class of people who came in 20 years back, they are very different. Today, those who come, they would not like to say what is it that they need or what is it to a group of people, why everyone else should know. So, and I think the data privacy legislation will probably annihilate whatever little group-based processes that are left there. So, we have to be prepared to deal individually. At the same time, bring them on a common platform in whatever manner, so that common messages get across, not necessarily for loans and then repayments and sanctions and disbursements.
Yeah, hi. My name is Emperor Gunashekar Naidu. I am actually PVKN Government Degree College topper in Chittor district. I am from Andhra Pradesh, and also I am here from Kuwait language. The fact to be understand is I really appreciate the program the way it is happening, because I know the Sri culture from my childhood, and I know how the Dokra groups worked, and then because I work with the clean and green programs and also Janmabhoomi at the time, and so on. Like after that, now self-help programs. Now the fact to be understand is I would like to know, as I said before I get in question, my name is Emperor Gunashekar Naidu. I am extraordinary judge and extraordinary justice of Karnataka High Court, and also elevated to Supreme Court of India as the extraordinary Chief Justice. That time Mr. Nutalpati Venkatramana sir is aware of me, and also and also now D.Y. Chandrachud also, and so on. The fact is, for sericulture and also different types of programs which the small and medium scale microeconomics which is happening, I would like to know what is the on an average amount that has been dealt to in villages, especially the medium scale producers, and on an average what is per person it has been dealt, and also I would like to know what is the repayment percentage. I have seen that earlier reversals and percentage and amounts and all. So I would like to know what is on an average that amount has been contributed, and what is the reversals that has been happening, and also if any amounts that not been dealt, then how the process been taken care? Like, what is the basis that you people evaluate? Because to raise the fund and to give the fund to all the people to make them economically strong through the Microfinance Karnataka Summit in the Karnataka for that matter. So how exactly, like coffee plants, it could be tea plants, there are many associations. How exactly on an average amount being funded to each producer? So I would like to know. I really appreciate for getting an answer.
You are from Andhra Pradesh, so you are asking about Karnataka. Thank you very much. So I just want to answer your question. See, actually, 2-3 things are happening. The amount of loan given at a time to from an MFI to a member may be less, but they will be using that money in installments. For example, you want to construct a house. With one loan, you do the foundation. The second loan, you go up to the lintel. Third loan, you go up to the roof. Similarly, it's about enterprises also. You scale up gradually. If you are talking of silk, in the first loan, they may be taking only mulberry cultivation. In the second loan, they are going for equipment. In the third loan, they are going for actual marketing process, if there are additional machineries. So it's about compartmentalizing the requirement. That is what, actually that increases their repayment capacity, their goal setting, their actually focus on activity. All these things will increase because of this kind of innovation that the people are doing because of the microfinance. If I had given them all 5 lakh rupee together, he would have wasted that money. Now because I am giving him 1 lakh each time, he is not wasting it. He knows how to use it. So he is more focused now. I think microfinance has really changed the mindset of the borrowers. This is my answer. I mean, it's a quick answer, but I think you should, yeah, thank you.
Okay, I think, we have run out of time. So we have to conclude the session. We are there. You can ask us questions when we are around. The only thing I'd like to say that, by 2030, because a lot of our customers have moved up the ladder, they are now all aspiring middle class, There are definitely right at the bottom, but majority are aspiring middle class. And that forms a huge portion of the population in India. And I think microfinance or institutions and who are involved in that, they will be actually more and more supporting this segment, which will actually take India to the next stage of middle income country, the 10 trillion, 5 trillion, I don't know, whatever numbers they talk about, that kind of a country. But it all depends on this segment of customers and how we support them. Thank you.